All right, let's talk about Steven Dux. You may have heard the name, but his story is so much more than just a big account balance. This is really about how an engineering student approached the market not like a gambler, but like a scientist. It's about data, patience, and an almost fanatical belief in statistics. So, just look at this number for a second. Over $50 million. I mean, that's an absolutely staggering figure. But here's the kicker, the part that makes it truly mind-blowing. He started with just $27,000. That's it.
So yeah, that's the million-dollar question, right? Or in this case, the $50 million question. How on earth does a student, an engineer from China, pull something like this off? Well, I'll tell you right now, it wasn't a lucky stock pick, and it wasn't some secret indicator. It was a complete and total shift in how he viewed the entire game. To really get how he did it, we've got to rewind the tape a little bit. Dux's story doesn't begin on Wall Street. It begins in a classroom, as an engineering student. And trust me, that background, well, it's the secret sauce to everything that comes next. So, when Dux first landed in the US, he had one goal: find financial freedom. Like a lot of people, he thought the stock market was the ticket. And his first trades? An absolute train wreck. He got crushed, blew up accounts, the whole 9 yards. But this is where the engineer in him took over. Instead of quitting, he locked himself away. For 6 solid months, he spent 10 hours a day, every single day, just poring over charts, building this massive database of statistics. This wasn't just studying. He was building the foundation for his entire career. That was the breakthrough. He decided to stop trading and start experimenting.
And this right here, this says it all. He stopped being a guy hoping a line would go up. He became a scientist who saw every price tick as a data point. He wasn't just looking at a chart. He was turning that chart into cold, hard numbers. He basically built a laboratory, and the stock market was his giant, chaotic experiment.
Now, before we even get into his specific strategies, the X's and O's, we have to talk about what Dux himself says is the most critical system he ever built. And that's a system for controlling himself. Because he figured out really fast that the most dangerous variable wasn't the stock. It was the guy staring at the screen. This quote from him just nails it. Think about it. That feeling of FOMO, the fear of missing out, or revenge trading after a loss, those emotions can absolutely wreck even the most perfect strategy. Dux knew, deep down, that he had to get a handle on his own psychology before he could ever hope to consistently beat the market. So how did he do it? Not with willpower, but with a system. A dead simple, unbreakable set of rules. Rule 1, you take a loss, your very next trade is automatically half the size. Period. This stops you from going on tilt and trying to win it all back. Then, on the flip side, after a big successful trade, he physically withdraws the profit, takes it right out of the account. It's a brilliant mechanical way to fight off that feeling of being invincible that often leads to your biggest losses. It's a system designed to protect his account from his own human nature. Okay, so he's got his head screwed on straight, he's got his risk dialed in. Now let's get into the fun stuff. Let's see how all that discipline and data manifests in his actual trading playbook. Every single one of these strategies was born from those thousands of hours he spent in his lab just hunting for patterns.
The first piece of data Dux always checks is something called float rotation. Now, the float is just a fancy word for all the shares of a company that are actually available for people like you and me to trade. Float rotation measures how many times all of those shares have been bought and sold in a single day. For him, this is the #1 sign of pure, wild speculation. And the math couldn't be simpler. You just take the daily volume and divide it by the float. Now, if that number is 1, or sometimes even higher, think about what that means. It means the entire public supply of that stock has changed hands in one day. To Dux, that's a massive siren going off. It tells him the stock isn't trading on its value anymore. It's a hot potato, a bubble that's just begging to make a huge move.
And that leads perfectly into one of his classic plays, the first red day, or FRD. So picture a stock that's just gone parabolic. It's up 200–300% in just a few days. Everyone's screaming, "To the moon!" Dux? He just watches. He waits. He's not interested until the party stops, until that stock has its very first day where it closes lower than it opened. For him, that's the statistical signal. It's the first crack in the hype, suggesting the herd is about to turn.
But he's not just a short seller. He finds opportunity in fear, too. The morning panic dip buy is all about exploiting that chaos right at the opening bell. You see this massive wave of panic selling, People are just desperate to get out. While they're hitting the sell button, Dux is looking for a very specific setup. A brutal, fast, roughly 40% drop. If he sees it, he steps in and buys into the panic, looking to scalp a quick 10 to 15% bounce as things calm down.
Okay, here's another, more advanced one. The gap up short. This happens when a stock closes one day and then opens the next day way, way higher. It creates a gap on the chart. A lot of traders will see that and just immediately start shorting, thinking it's a bubble. But for Dux, that's just a coin flip. He needs way more data before he'll risk his capital.
And this is where his analysis gets, frankly, next level. He looks back at the previous day to find what he calls the neutralization area. Basically, the price range where buyers and sellers were in a stalemate. If that stalemate happened at a low price, he anticipates a monster 75% collapse of that morning spike. But if the stalemate happened up high near the peak, he knows the buyers are stronger, so he sets a more conservative 50% target. You can see in the example here, this one calculation completely changes his trade, his risk, and his potential profit. It's the difference between gambling and having a statistical edge.
So we've seen the playbook, but here's the thing. Knowing these patterns is one thing. Actually having the discipline to execute them day in, day out, well, that's a whole different beast. The real secret weapon here isn't the strategy, it's the process. I mean, just look at his daily routine. What do you notice? How little of it is actually spent clicking buttons. The morning is all about watching. The afternoon is pure data entry, feeding his spreadsheets. The evening is spent analyzing every single trade, what went right, what went wrong, like it's a lab report. The most important activity on this list, patiently waiting. Dux has said that money is made by sitting on your hands, and he's absolutely right.
And here's a really cool little fact about him. He actually credits his lightning-fast decision-making skills to playing thousands of hours of the video game StarCraft. It trained him to spot tiny changes and react instantly. But, and this is a huge but, he is crystal clear on this. While his reflexes might be fast, the decision to act is never an impulse. Every single click is triggered by a setup that he has already vetted, already analyzed, and already confirmed with his data.
So, when you boil it all down, the backstory, the mindset, the rules, the strategies, what's the ultimate lesson we can learn from a guy like Steven Dux? What's the core takeaway?
I think this quote from him says it all, really. The market is always changing. New companies, new algorithms, new headlines. But the things that actually drive the price, greed, fear, panic, euphoria, those are hardwired into our DNA. They don't change. Dux's entire system is built on that one timeless truth. He's not predicting stocks, he's predicting human behavior.
So, if you're looking for the secret, here it is. It's not magic, it's work. It's the discipline to follow your rules even when it's painful. It's trusting your statistics over the noise. It's the patience to wait for days or even weeks for the perfect pitch. And above all, it's understanding that your greatest weapon in this game isn't a hot tip you heard or your own gut feeling. It's the cold, hard data you've gathered yourself.
And that kind of leaves us with one big final question to think about. Dux himself has tweaked and adapted his strategies over the years. So the question for all of us is, do these patterns, which are based on human psychology, still hold up? Or has the market, with all its high-frequency trading and new players, fundamentally changed the game for good? It's something worth thinking about.
Thank you for watching our video. In the next episode, we will examine the journey of another legendary trader. Don't forget to subscribe and turn on notifications. For more content and strategies, you can join our Telegram channel. The link is in the description. Stay well.